Hello everybody, $Swissy on my radar, and I will explain what I'm looking at right now. If you guys are new, what I'm doing here, I'm looking at some good opportunities that may happen next days, as well as I'm explaining some aspects of technical analysis or psychology of trading. Sometimes I'm very right, posting winner after winner, sometimes I'm wrong. Well, this happens. It is trading. Without losers, we don't have winners. And this is the psychological part. You cannot win always. You only can play the probabilities. And if the probability says that you have 60% of a trade to go to your take profit and 40% of this trade to hit your stop loss, this means that you have 60 winners and 40 losers in 100 trades. Well, what I say, I mean that without those 40 losers, you won't have those 60 winners, because the strategy contains both. It contains winners and losers. If you have 60 winners, you will have 40 losers. If you have 40 losers, you will have 60 winners. But if you are trying not to have losers at all, if you are trying to avoid those losers, your mind will use a pain avoidance mechanism. So you will become blind to some opportunities. The opportunities will scare you, and that's why you will miss the opportunities. You will not trade objectively. This is a very important thing about trading. So guys, remember once again, without losers, you don't have winners. Without winners, you don't have losers. Don't try to be always right. Just play the probabilities objectively. Okay, let us start then. As usual, I analyze the high time frame. First, I am to identify what price is doing now and to predict what price is most likely to do next. And then I switch to my trading time frame, where I am to decide how can I get involved and to actually execute the trade. So the whole process is called identify, predict, decide, execute, or IPDE. Well, look at this chart. We obviously have an uptrend. Obviously, but I want you to pay attention at the swings of the market. What is an uptrend? An uptrend is a series of higher highs followed by high lows. So we have low, we have high. I start from this moment because it is the lowest point on my chart that I can see. We have a high, then we have a retest of highs. So we fail to break that first high. What means to break? It means we should close above the previous high. Then we have a retracement back to that resistance level. So this signifies that we are consolidating. And then we test that high once again. Although we have that high to the upside, you can see we don't have a candle close to the downside. Oh, sorry, above that high. That's why we have that large movement to the downside to test the previous borders. Okay, and then boom, what happened there? We finally violate that, break and close above the previous high. So this shifts the whole price movement into the next level, and now we have an official uptrend. What happens next? We have a retracement, and then we have another violation. So now we have a series of higher highs followed by higher lows. Okay, and what happens next? Then we have a retracement. Yes, we don't violate the previous low, so this is a valid outside return of previous new structure high movement of previous impulse. And then we have a first sign of reversal. The first sign of reversal says that we cannot install the new structure high. We cannot break and close above the previous high. So this is the first sign of reversal. After that, we have a violation to the downside, like this. Violation to the downside. First sign of reversal and the confirmation of reversal. So this is called the confirmation movement. So most likely when we have this kind of movements, we have an outside return and then we violate the previous lows. This is about 55% scenario. So it happens this way about 55% of the time. If you are familiar with 2618 setups, this is exactly what I'm talking about, the 2618 setup. Why it is called 2618? 2 stays for double top and 618 stays for a retracement. Usually price hits the retracement and then it goes to retest the lows or to 127 extension as well. The 55% probability setup. If you trade dailies, you can place your limit order, pending order, waiting for price to come here and then go short. Okay. Can we see something else on this chart? I want you to pay attention to these tiny consolidation movements, to these things. If you can see these candles, pay attention to them, please. Something acted as support here, then we bounced, then we broke that support, consolidated a bit within some support zone, and then we broke it once again to the downside. And if you pay attention to that, you will see a very nice parity number here. Horizontal line properties, I will call it 1. You see? 10000, very nice psychological number. It acted as resistance previously. Well, the zone of this acted, let us make it large zone. The zone of this parity number acted as support, then it acted as resistance, and then we violated that to the downside. Okay, if you guys have some problems in identification support resistance zones, in identification major pivots, reversal points, I advise you to use the fractal zone indicator. It is very helpful. Just run it, set your higher time frame, and it will show you major support resistance levels. So when we have 0 even number, let it be here, 0 even number, you see they coincide, those zones. Okay, if you switch to 4-hour time frame, those zones, the zones stay on your time frame. For example, here we bounced from some previous, the chart was this way, yes. We came back to resistance zone and price began to consolidate. We first violated the support zone and then we reached the previous support zone, bounced off that support zone. Where the price will most likely to go, it will most likely to go to previous resistance zone that was drawn with that rectangle. So then where the price is most likely to go, it will go to previous support zone. And broken support, this rectangle, yes, acted as resistance as well. Then we broke that support, then we retested that support, then we broke the lows, then we tested that support as well. If you go here, it is the previous support of this. And if we go to this red rectangle once again, it is a good opportunity to have selling, to have short position. Okay, let me show you something. I am trading advanced pattern formations, so I am using advanced pattern rules of engagement. If I meet some bad formation, if I meet some godly formation or cipher formation or butterfly formation, coinciding with the support or resistance zone that I indicated on my higher time frame, I will enter aggressively with limit order. Let me run my pattern search script and you will see a bearish bet. It is valid. So the entry for this bearish bet is 1.0023. So we have 23 pips higher than the parity number. Well, and this gives us a nice risk to reward ratio. So we are risking 62 pips to generate 100 pips. Well, this is the opportunity I'm looking at. Advanced pattern formations are extremely good, especially if they are combined with support and resistance zones. Hope you like that. Until then, good luck, good trading. Give me your thumbs ups if you find this video helpful. Subscribe to my next video. Join me on my trading view. Join me on my Facebook. And visit my website as well to learn more about those advanced pattern formations and learn more about my trading software and pattern recognition software. Until then, hope to see you soon.